started. We've got a lot of content to cover. So we're going to be talking about key metrics to look for in a sub-market for apartment syndications. I'm going to close a few of these windows up here to clean my screen up because I'm going to be using CoStar a little bit here, and I want to be able to have a good thing to show you. So what are some key demographics that we look for in a submarket? Okay, submarket being where we're going to buy properties, whether that's the city or the submarket within the city. So the key ones obviously are, you can see them listed here. What's the ideal income for the submarket? We're going to go over that and how I can figure that out. Are there rising rates, rental rates in that submarket? What about population? Is that growing? What does the media say? Is it talking, does it have negative press? Does it have positive press? Are you familiar with the submarket? So all of those are some things that we're going to go over today. So employment demographics are a big part of whether we want to purchase in a submarket or not. Who is in the submarket as far as a corporation level? Is it heavy on medical? Is it heavy on military? Is it heavy on student population? Kind of who makes up the demographic of your resident base? And that's one thing that we look at when we're trying to pick a multifamily submarket. One thing that I point out is we want to have a lot of blue chip corporations within the submarket. So these are well-known companies, your Apples, your Teslas, Google, things of companies such as that, Volvo, Boeing, BMW, Michelin. Those are companies that we want to see within the cities or submarkets that we know they're stable, they're not going anywhere. And if they have a base in the submarket we're looking, that is a definite positive. You're not always going to find that. And then we also look for a diversification of economic sectors. What I mean by that is not all manufacturing or not all tech or not all banking. So we like to see a good mix of those sectors. So if that one sector of the economy is hit in a downturn, such as we saw in 2008 in finance or banking, Charlotte at that point in time was not diversified. It was heavy banking, so it got hit a little bit harder. It has since diversified and has a lot of tech and banking as well as manufacturing. So we like to see a good mix of employers within the submarket. So look for that. We love medical because that's not going anywhere, especially with the current COVID situation. That's a big sector of the economy. We don't want to see a heavy military population simply because of deployments, and that could affect your resident base. So you want to be careful there, and also because some of the lender restrictions. We love our military. I definitely want to give a shout out to our military right now. We're thinking of them and praying for them. But when it comes to picking multifamily submarkets, we do take that into consideration as sometimes a negative. Now, I live in Columbia, South Carolina. We do have one of the largest Army bases in the U.S. And we'll get to the metrics. I see some questions coming up. I will show you what I'm talking about here with the employment metrics. So just hang tight for me, if you will. We'll get to that in a minute. But in Columbia, South Carolina, we have the largest actual Army base, but we don't do a lot of deployments from that base because it is a basic training base. So you can't just say, oh, it's got a military base, so it's, we don't want to purchase multifamily there. That's not necessarily the case. But like Fayetteville, North Carolina, if anybody's investing in Fayetteville, North Carolina, don't take this as you shouldn't. This is just something that I have taken into consideration with that. It doesn't have a lot of large employers. So the military becomes one of the largest population drivers in the area. So it can be affected by, let's say there's administration change and they want to cut back on military and they decide to shut down a base somewhere. Is yours going to be affected? And is that going to heavily affect, any multifamily you would buy in the area? So those are some things we take into consideration. So let's jump in a little bit. Let me go ahead and pull this over. All right, this is some underwriting for Ascend, Waterly. This is our average rent. So I'm going to focus here on our average rents. Let's see here. And let's go here. All right, here's our average rents here. So we have average rents on the trailing expenses, and then we have our pro forma average rents. So this is really the number that I'm concerned about because this is where we want to push rents. And so this is really the number I want to look at when I pull up my statistics. So what I'm going to do is go to CoStar. I've already have the property pulled up. So you can see over here, this is Ascend Waterley. This is one of our deals. There's still a little bit of room in there. So if you want to jump in, you can. This is a beautiful deal on the southwest side of Orlando, just below Disney on that side that we purchased just a couple months ago. So beautiful property. But how do I know I want to buy in this submarket? Orlando, as you know, is a great market. You have a lot of employment. A lot of people think Disney and they think Universal and they think bad market, right? It's very tourism driven. And therefore, I don't want to purchase in that submarket. But there are a lot of other employment drivers in the Orlando market besides the parks, and also most of the resident base that we are trying to attract are more in the executive level or upper level, because we're buying, in this case, a Class A property with $1,600 average rent. So the big thing that you want to talk about when you're looking at a submarket and the class of property that you want to purchase, in this case, we've selected Class A and our average rents are $1,600. Is the average income higher than 3 times our rent? All right, so 1,600 times 3 times 12, so you're in the $60,000 range for income. So I want to come over and I'm going to go to demographics. Okay, and I'm going to look at some of the first things I'm going to look at is the population within the submarket. So you can see right here, you have your 2010 population and your 2021 population right here. All right, you can see the jumps in those, very significant. And you can see the projected growth. So you see a decline in growth, but still growth all the way to 2026. And you can see the percentage of growth here, 24.9 and 16.8, 24.9% growth in a 2-mile radius. So that means we are right in the center, the epicenter of the growth within that submarket, but still good even 5 miles out and even 10 miles out. So great growth there. That's what we're looking for. And you can see some awesome metrics here, annual growth for 2021 to 2026, so projections. So it definitely slows down, but those are projections. So, that can change. Median age, you can see here. So, and education level and armed forces, kind of what we have going on there. So let's look at the income. I'm going to go over here. You're also looking at how many households are in the area, household projections, annual growth, owner-occupied households. So how much are you competing with a single-family housing market within the submarket? How many people are you going to lose? What's your turnover going to be to single family? That's something that we are paying attention to. But the average household income is the big one here. You can see right here, 105,000. That's, average. So we want the median or the number that occurs the most often, and that's 88,000. So we know that this property is great because we have a $1,600 average rent and our median income is 88,000. Therefore, we are in good shape as far as income is concerned within a 2-mile radius. Okay, so that's one of the ways that we find this, and this is CoStar. Let's see, I'll check the questions periodically and I'll see if I can do some searches for you. I know there's a specific city called out here, and I'll see if I can pull that up for you and see if we can find some information. So if that would be helpful, do some little case studies, if you will. All right, so that's kind of where we look at the income level. As far as the population, here's some graphs, obviously that talks about, but it's going to come down here and it's going to talk about some of the employment. So service producing industries, trade and transportation, information, financial activities, professional and business services, education and health services, leisure and hospitality. And I'll tell you what I'm going to do here. I'm going to stop share for just a second, and I'm going to move my I'm going to move my screen over in front of me so I'm not looking off to the side all the time. Give me 1 second here. Stop share. That did not work. Give me 1 sec. Apologize about that. Screen 2. All right. Now, can you all see that there? Trying to pull up my chat here. Having a little bit of technical difficulties with the windows. Chat. All right, good deal. All right, sorry about that. All right, so you have service producing industries again here, not to belabor that point, but it kind of gives you a feel of what employers and where the employees or the potential residents work in the area. So do we have a good diversification, and where is the heavy burden? We do see there is a heavy burden on leisure and hospitality, but pretty good balance the rest of the way. But again, if you compare that with the income levels, most of the time, leisure and hospitality, you're looking at more upper level, and they weren't as affected through COVID. Consumer spending, you can see where everybody is spending their money. So there's a lot of metrics to go through here. And again, just pretty much endless. All right, so I'm going to go back up to the property, and I'm going to go to analytics. And this is also going to talk about kind of the multifamily market within the submarket. Okay, so you can see like vacancy rate at the property, 1.4%. Congrats to us. 4 to 5 star submarket. Within the submarket as a whole, it's 8.7. That tells me there is a little bit of supply there, because it's a pretty high vacancy rate. I think most of the time we're underwriting a 5% vacancy rate, so it's a little above what we like to see, but we're doing fine here and burning off concessions. So you can kind of see how many vacant units are in the submarket here. Inventory, you can kind of see again what's going on here. Existing buildings. So there's a lot of, I don't want to spend a lot of time just going through data, but I wanted to point this out, as this is one of the major tools that we use. And a lot of you are asking, great, what if we can't afford CoStar? And that's a viable question, because it is very expensive. All of your brokers will have this information or something similar to it, so you can request these. One way that we do that is go to here and go here to reports. And this is a very helpful report. The full underwriting report is very helpful. So for a specific property, it's going to give you all of those demographics. I'm going to pull that up real quick and show you. It's going to take a second to generate, but I just want to kind of show you what that report looks like. I'm going to move that off, and I'm going to switch over here. All right, we'll give that a second to pull up. So we've gone over the key employment demographics at a very high level. Kind of what are we looking for? We're looking for that economic diversity. We're looking for some blue chip companies. Are we seeing, some of the big names that you know of in the economy, in the local economy? And what is the ideal income for the submarket? That's over three times your average rents. You want to make sure you're getting that and well above. And when you're looking at a specific property, you can get the demographic reports from the broker. We request these, and so we can see what the actual demographic report is for the property itself, so we can actually see where everybody works, because that is data that we compile as we are doing our due diligence. All right, and then our rates rising. We looked at that. Let me jump back here. So we're looking at rental rates, asking rents. Okay, what are they at? Are they as the average over? Well, these are our properties. Here's this in the submarket. So our comps in the submarket, we are above the average, but you also have some older properties there, which drive the average down. So the median, we are over the median. But you're looking for rent growth, population growth. Here's your vacancy rates. So these are all things that we're looking at: vacancy by bedroom, occupancy rate. And I'll pause for a second. Underwriting report for Braxton Waterley. That's going to be a big one to email. It's a pretty large report. I'm going to share it though. Somebody was asking for the Braxton Waterley report. Let me just grab this real quick and pop it up here. All right, so here is the underwriting report. So it pretty much just goes over everything possible: unit mix, what all the average rents are currently. There is a lag somewhat in CoStar's data, so it's not going to be necessarily today's rental rates, but you can just kind of see. There's the photos, obviously, which we don't need to see. Here's your comp set. It's going to give you everything that you need to know. Here's all of our comps in the area. There's some photos of it. So there's a lot. You can see I'm way up at the top. I'm just going to scroll down through. I'm not going to spend a lot of time here because this will take forever. But that is what CoStar provides. So if you go to your broker and ask for these reports on a specific property, you should be able to get them. But let's talk about here's more of a submarket. So we're talking about a submarket here. So this is a lot of dialogue along those lines. So it's, talking about the submarket as a whole. So again, you can click, I just clicked on submarket right here. So you have property, submarket, and then market. So that's going to be more Orlando as a whole. And you can see it gives you all the demographics for that. Another thing that you can do, and I apologize, I should have had this up already, is you can get the Marcus Millichap multifamily outlook. I'm going to pull that over here so you can see this. And this is free. You can just type in Marcus and Millichap multifamily investment forecast, and you can pull this out. So they provide this. So you're going to have to put in your name and your email address for this, but it's easy to. Sorry, I got distracted there. It's easy to obtain. It's free. So it's talking about which places are affected the most by COVID. You can see pre-crisis profits. The one page that I wanted to point out is this one. It's very, very important. All right, in-migration momentum. These are Sunbelt metros noting exceptional in-migration, household formation, and employment growth prior to health crisis. Have the strongest multifamily tailwinds. Fewer job losses in the market should help expedite the economic recovery. And I am reading this, aiding rental demand. So here are your cities in migration momentum: Atlanta, Austin, Charlotte, Dallas, Fort Worth, Denver, Nashville, Phoenix, Raleigh, Salt Lake City. We are in all of those markets, or looking in all those markets except for Salt Lake City and Nashville, but we are looking in Nashville. And let's make a couple notes here. And then demographic tailwinds. These are just ones that they fall in the category aligned closely with the strongest tailwind groups above, but they're not quite as strong. So they're still doing well. They still have that tailwind, but they're not quite as good as these top ones. And that's Houston, Indianapolis, Riverside, San Bernardino, Sacramento, San Antonio, Seattle, Tacoma, Tampa, St. Petersburg. And then you have then you keep on going down the line. You have mild pandemic setback. A handful of markets throughout the Midwest and Central U.S. comprise this grouping. Apartment conditions here have been comparatively calm during the pandemic, with modest development helping abate demand-driven headwinds. Okay, so basically what they're saying is they've stayed flat through COVID, but that's not necessarily good. I mean, they're stable, but can you push rents if you don't have population growth? And the answer is no. So the mild pandemic setback ones are not necessarily ones that we want to jump in. And protracted recovery. So these are ones that pulled back. You do see one in there, Orlando. I do have to disagree with that one. So because we are seeing, you saw the other report that was different from that, and that is current. So this is a projection. This is kind of an outlook, whereas ours is based on. So it gives you a good snapshot, but you can't be 100% on these. So you have to do your own research, but it gives you a good sense. You know, these are all ones that we like. I'm looking in Houston. I'm looking in San Antonio. I'm not looking, obviously, I am looking in Tampa. I'm not looking in Seattle, Sacramento, San Bernardino, or Indianapolis. So I'm kind of with that there. So just giving you some tools or resources so you can try to find out where you want to invest, some metrics to look for. So these are helpful tools. And again, this is just the Marcus & Millichap Outlook. Here you have population growth influences and local rental demand. There's your absorption, so your supply. There's a lot that you can obtain from this. So let me get out of that. And is everybody seeing the Marcus & Millichap? I just want to make sure. Are you seeing my other screen? Just want to make sure you're seeing this Marcus & Millichap report here. So put it in the chat there. Yes. Okay, great. Excellent. Let me get out of that. All right. Now I want to go to kind of the main page, and let's just do all right, let's just look at a particular market. Somebody asked the question, how often should you do this? Annually, updated on a submarket annually, or 5 to 10 years? I would say annually, if not more. I would do it probably about every 6 months or so within the submarket. So this is obviously on every commercial property that there is. We can break this down. Let's see, property type. We do multifamily. All right, and filter these down. We can get our CoStar ratings. Let's say, you know, we want to do kind of 4-star, number of units, you know, minimum. Let's see, let's do minimum, max units. Not going to put any there. All right, so you can kind of get an idea of what's going on here in the multifamily space and all of the multifamily that is available. And then I can click on reports for the submarket itself, lease availability report, property list. So if you want to really do a survey of the property and go travel, you can do all that map overview. You can go all the way down. You can get car counts, traffic count, all of these reports you can get, or you can get the total comprehensive report. I mean, you can click all of these boxes and print the whole big giant document, or you can go piecemeal. So a lot can be done there. Let me go back to CoStar's main page here. And I also want to click on markets and submarkets. This is another way that you can search for it. This is a little bit more data specific, so I apologize about that. But you can drill down into submarkets and click on them that way. And you can just see kind of a high, this is all commercial, right? So this has not been filtered yet, obviously. So that's all commercial, but it's a good way to look at what's going on in there. And then I want to show you one more, and then we'll jump to the next step. All right, so you pretty much have every single city listed here. So you see retail capital markets, market report, retail market report. So you can pretty much grab whatever report you need and take a look at it. It's going to take a second to generate, so I won't spend any more time on that. So any questions? I'm going to take a breath. I'm going to ask or see if you have any questions. Let me go back up here. Possible to obtain a copy of the CoStar. Yeah, if anybody wants the Braxton Wiley report, I'm not even sure. I think I have to zip that or use Dropbox, but if you email me, I'll see what I can do to get that to you. Let's see, somebody was asking the question about a specific city in North Carolina. So let's see if I can find that for you. It's kind of a case study to see what we can find here. All right, it's a little city in North Carolina. Let's check it out. All right, let's see if we can filter this list by multifamily. All right, so narrow it down, and let's just pick. I'm just going to pick a property at random and pull it up. So I have no idea, if this is anybody's property on the call. So I'm just grabbing one at random and taking a look at what we have here. All right, so it's pretty tight submarket, so it's going to be pretty easy to make this fit the whole region. So first we want to look at analytics, right? We want to see kind of where the availability is or where the vacancy rate. So this particular property I just clicked on was 1.3. Submarket vacancy rate is 0.5%. That's amazing. Market rents 784, effective rent 783. So market rent and effective rent means there's not a lot of loss to lease and there's not a lot of concessions. They're getting what they're asking for. Tells me that they're due for a rental increase though, because you have a high submarket vacancy. So if I was in this submarket, I would want to raise rents pretty significantly there and try to push the ceiling up. However, if you're the pioneer of that may backfire on you. I wouldn't want to base my underwriting on that if I were you, but I would certainly try to push rents and see what you could do. All right, so let's go now to demographics and see what we look like here. Population, so we're seeing a pretty flat in the 2 mile radius, actually a decline a little bit, and then a little bit of decline in the 5 mile radius. So not a lot of population growth right here. So just an example of kind of how you would go about checking out a submarket if you wanted to. Okay. So hopefully that's helpful there. I will go ahead and go back to my home page. Where do you find employment information that I'm looking for? CoStar is one place, but then also just Googling largest employers in, let's say, let's try it out here. All right. So this is, it's very easy. It's just Google largest. Actually, let's do a different one. All right, major employers. So, it's as simple as this. So you can kind of see what's going on and who is employing everybody and how many employees they have. So you see a very large joint base in Charleston, but your population there is such that it does not affect that as much. So it is a factor, but it's not one that's affecting us necessarily. And a couple I'm not seeing on here is Volvo. Actually, might be down here. But this is a basic way to find out who's employing people. So I just pulled that up from the Chamber of Commerce. So it's as simple as a Google search. So not too hard there. All right, let me switch to let me stop my screen share for a second. Let me jump over here. Let me go to my Q&A box. One question that we have is, can multiple investors share the cost of CoStar? The answer to that is no. They are very restrictive on who uses CoStar. You cannot share logins. There's two-factor authentication. It's based on email domain. So let's say somebody started working for us, but they hadn't switched their email yet to passiveinvesting.com. We couldn't give them access until they had switched that over. And then even if they're associated with another email address, we would have to prove that they no longer work for that company. So they're very, very restrictive on that. Obviously they're trying to protect their IP on there. So understandable. If you don't have access to CoStar, I know we've talked about city-data.com, I believe was the website. You can look at kind of population growth, things there. But really, folks, this is the information age. You can get anything you want. It's may not be as compiled and beautiful as CoStar with the graphs and everything, and just very focused on what you want to see, like vacancy rates, rental rates, population growth. But you can find it, right? You just Google, if it's, Omaha, Nebraska. I was there for a conference last week. So if I want to know something about Omaha, Nebraska, who are the biggest employers, just Google it. What's the average rent? Or apartments.com is going to show you. You can jump in there and kind of see, and you can build your own spreadsheet and find out what the average rents are. So, I mean, unfortunately, I don't know a better way to put this, but if you can't put in the dollar amount to afford it, then you have to put in the elbow grease or the sweat equity. I mean, that's the way it always works. So you can either pay to have it done, or you can do it yourself. Fortunately, that's something that we lean on heavily so that we can increase our volume of work. Our acceptance rate on deals is 1%. So that's a lot of deals underwritten. We are on track to do about 400 million in acquisitions this year. So you can think about all the deals that we have to look at in a course of a year. That does not leave us a lot of time to be compiling spreadsheets. So we have to have CoStar to be at the level we're playing. But that's why we do what we do. We look at all this data. It's very easy. One of the things that I tell our acquisitions team, as soon as you get a deal in, look at the average rents and then go right into CoStar and look at where the market rents are. If the T12 and the OM are saying, or showing a rent, and then you look at the market rents and it is, and you're higher than the market rents, then whatever the OM says about value add, raising rents, it doesn't make any sense because you're already at the top of market. How can you go any higher? But I see that all the time with brokers, this is, oh, look, nobody's touched this property. It's 100% value add. Great. I'm already at the top of market. So why am I going to spend, $10,000 a unit and not raise rents? That makes no sense whatsoever. So you have to do that research within the submarket to determine whether that is a place you want to purchase at. There's lots of other information out there. I believe that CoStar has a comprehensive report that I believe they put out. I know CBRE also has a report. Some of the I'm forgetting some of the acronyms for some of the associations with apartment conferences, but you can get reports all over the place. So, but the biggest resource for you in finding a submarket is going to be a broker within the submarket. But one thing that cannot be overstressed is your familiarity with the submarket, and that's something I want to settle on right now. You can do all the paper research you want to on the submarket, and all that can look great as a whole. But you can have one property that's in a terrible location within that beautiful submarket where everything makes sense, but it's set next to a junkyard. And so you have to know and you have to kind of understand where it's a living, breathing organism, the submarket, wherever you are looking at. And so you have to understand it. So it's all based on your risk tolerance. If it's a very low risk deal, and you're not trying to push rents very hard, and you've toured the deal and you kind of understand where it's sitting, it's in a good area, okay, that's fine. If it's a little bit higher risk deal, like you're having to push rents, and you have to really understand that submarket. So in a deal like that, it has to be a submarket probably that I'm going to live in, or that I'm very, very familiar with, at a familiarity such as one that I've lived in. Like Greenville, South Carolina, we've purchased some deals that are a little bit heavier value add than we normally would, because I understand that market at a high level. I know all the streets, I know where everybody is, I know where everybody wants to be and where everything's moving. So I understand that at a high level. Whereas if I'm moving to a new market, let's say I'm going out to Phoenix, Arizona, I have to look at the reports, and I haven't quite learned that market yet. So I'm going to be very cautious about a heavy value add unless I really understand where I'm at. And that's, again, leaning on the brokers. Some of the brokers, when we were moving into the Jacksonville market, had a beautiful Google Maps Pro map that they used. And you can build in individual layers and then stack them on. They're like, okay, this is the tech sector, and that's kind of where this is all over here. And this is kind of your aerospace sector, or it wasn't Jacksonville, it was Melbourne. Aerospace sector over here, and kind of this is the sector over here, and here's all your new growth, and here's where the development's going to push. And they had them all highlighted, and they were showing us on the map by removing layers, kind of what they were talking about. That's very, very helpful. I still got to check it out myself and make sure they're not feeding me a line, but it wasn't for associated with any specific deal. So I definitely was more believing of the data they were providing, but again, I'm going to check it out. So that's really, I want to stress, you need to be familiar with your submarket. That's why a lot of you will invest for the first time within your submarket where you live. And then a lot of people like to drill down in a submarket. So instead of just having 7 to 10 submarkets that they're buying in whatever one comes out, they'll pick one submarket that is their favorite and then drill down in that submarket because they understand it at a high level. That's a judgment call you're going to have to make. So let me jump back to the questions real quick. So the data, again, just to recover, that I've been showing is from CoStar. That is a subscription based. You can get it off of Google's. The Marcus and Millichap multifamily outlook report is one source that I've showed. You can get with your broker and get that same information as well. Is the CoStar site available to everybody, or do you have to be a realtor to access the report? So you do not have to be a realtor, you just have to pay for the subscription. So it's based on volume of work. So if you don't have a large volume of work, you're not going to get charged as much. So your big companies like Blackstone have a huge subscription. We don't have near that, but it is based on our volume. So as we add people, we do have to increase that. So if you only have one person, maybe you just want to have one login and you're only going to do you're going to do a few deals a year. Buying a CoStar subscription might not be advantageous for you, but that's just a decision you have to make. Is submarket considered the same as a secondary market? No, submarket. Let me back up. You have primary markets. That's going to be like your Charlotte, Atlanta, Chicago. Well-known metro areas. Those are primary markets. Secondary markets are going to be more like Charleston, Greenville. Trying to think of some that are big metros that have good economic basis, but they're not those primary markets that everybody knows. They're not the LAs, they're not the DCs, they're not the Chicagos, they're not the Atlantas. Those are all the primaries. Secondaries are like good, but not metro per se. Tertiary are going to be more rural. So like I mentioned, Fayetteville, North Carolina. Earlier today, that's going to be, in my opinion, a tertiary market. Florence, South Carolina, tertiary market. So that's kind of what I'm talking about there. Submarket is going to be, so I have a market. A market is where I'm looking. So the MSA, say Atlanta MSA. So that's a market, right? But you have submarkets of Atlanta. So you'd have Buckhead, right? Or you'd have, you can even almost consider Roswell now a submarket of Atlanta. So, do you have to look at that? Are you in North Atlanta, South Atlanta? Those are the submarkets within the market. I hope that makes sense. Who defines the submarket? You define the submarket. You can drill that down to, like in Orlando, you have like Winter Garden or Winter Park or different Kissimmee areas. So those are submarkets, but you can hone that down and say, okay, I'm only looking in this hyper local region within the submarket. So a submarket within a submarket. Give me one sec. I got a broker calling me about a deal I'm working on right now. So never stops. So I hope that makes sense on what defines a submarket. What's a primary, secondary, and tertiary market? What's a market and a submarket? Any other questions? I know we're getting short on time. Is there a way to get a list of multifamily properties in the area without using CoStar or drive down every street in an area? Yes, there is. You can do that on Google. You can do that on apartments.com. You can do that on a lot of different sites. So you don't have to have CoStar. CoStar is just like a very focused data site that is specifically designed for high volume real estate firms. All right. So it's the best of the best, but you don't have to have it. You can do it. Would the submarket be the Google Map neighborhood within I'm trying to scroll down here. It's not showing me the rest of that question. I don't know why. Sorry about that. Would the submarket be the Google Map neighborhood? Yeah, it can be. It's more about what the locals know as a submarket. So they'll say, in New York where I'm from, it's like 315ers. I'm from 315 area code, and then you had, the different cities, Wolcott, Red Creek, and then you have like, so it's really you kind of have to know what everybody's calling it. Within the submarket. So you could have a submarket that's called something on the Google map, but then when you get there, it's like, oh, we call that such and such. And so, you can kind of use that loosely on the Google map, but find out kind of what it's called locally. So you can, when you talk to the brokers, they're probably going to refer to it as the local name, if that makes sense. Where are you getting your cap rates? Cap rates are a fluid number that is only a measure of where you're buying an asset based on recent trades. That was a mouthful, but basically it means nothing except for telling me whether I'm overpaying or underpaying for an asset based on recent trades. So if everything's trading at a 4 cap and I'm paying 3.5 and overpaying for the property, most likely, unless I'm a value add, in which case right now value adds are trading at a more compressed cap rate than new deals, which is why we're buying new deals. So on average, my new deal cap rate pretty much nationwide is going to be anywhere from 4.75 to 4. Okay. And I know that's a big range, but that's nationwide. So some of your lesser in demand markets are going to be, 4.75. Your normal market's going to be, 4.5, 4.25, and your in demand market's going to be 4 to 4.25. 4.25 when I say it that way. But your value add is you're buying the upside. You're paying a premium for the upside. I know it's crazy, but that's the way it is right now. So you're talking 3.5 to 3.8 in cap rates for value add deals, and then year one cap rates can be around 5. So I mean, your stabilized is going to be around a 5 cap rate. So again, I'm said a lot of numbers there. That's a whole nother discussion on cap rate, but that's a high level. Do multifamily sales have to be registered on MLS and will always be available on MLS? That's a good question. I don't know because I don't do anything with MLS. I have my broker list. I don't have a real estate license or have an MLS, access. So it doesn't really affect me. 100% of my deals come through broker relations, and it really is so important. I can't stress this enough. If you do not have a good relationship with your broker, you are not going to get deals, period, end of story. So get to know them, become friends with them, take them out to dinner, go out golfing with them, send their kids birthday cards, birthday presents, whatever you need to do. I'm serious when I say this. Become friends with your brokers, and not just to get something for yourself, actually be like friendly with your brokers and get to know them at a high level. It's going to pay off. They're going to send you stuff that they wouldn't send people they don't like as much. Okay. That's just business. Can you share some of your lending rates with terms and conditions with some of our recent deals? It's kind of hard to do that because it changes. It depends on the deal. It depends on the submarket. Depends on the asset. So for me to give you rates, some recent rates would really not be profitable because they change all the time. So I'm not going to do that. But it's constantly changing. You have to have your finger on that pulse all the time. So let me look back. Questions. You can get in touch with us. My email is brandon@passiveinvesting.com. Our website is passiveinvesting.com. And last question that I'll take right now, how do you find brokers? Again, our good friend Google, let's say you want to go to Charlotte, multifamily brokers in Charlotte, and it's give you a list of them. And then it's going to take the elbow grease and the sweat equity, and you're going to get in your car and you're going to drive, set up meetings and get in your car and drive there and sit down and talk to them and get to know them. That is how you get brokers. And then once you get a few deals under your belt, then you can start leveraging those relationships to hop into other markets and submarkets. So if I've closed with a broker from, let's say, Newmark in Raleigh, and I want to jump to Houston, I'm going to ask the broker in Raleigh, hey, can you give me a reference to your counterparts in Houston? And they're going to give me hopefully glowing reports that we love this group, we love doing work with them, you really need to sell them a deal, blah, blah, blah. And you can use the momentum you've already gained from your reputation there. So All right, that is all the time we have. I apologize, I'm cutting a little bit short. We've got about 7 minutes left, but I am working on a deal contract right now, and I've got the broker and my attorney calling me, so I got to jump. So thank you for joining us. Be sure to check in with us next week. I'm going to pull this up real quick before we go and refresh. Next week, we are going to be looking at, let's see here. All right, you should be able to see that. Apartment syndication, SEC, Reg A versus Reg D. And I know that's going to be Dan because that's his lane. That's not where I thrive. I thrive on the assets themselves. So he's going to be talking about which is the most popular for apartment syndications, Reg A or Reg D. Are you allowed to advertise your deal for each one of those? What are the limits that you can raise? Should you hire an attorney, and so much more? So be sure to check that out. It's very, very important. This is a litigious field, and so make sure you have the information you need to do well in the multifamily space. So again, thanks for joining us. I hope to see you guys next week as Dan presents, and I hope you have a great rest of the day, and God bless America.